The first 3 quarters of 2024 delivered strong results for Matco's balanced fund, with a year-to-date gain of 9.3%. The balanced fund is a multi-asset class investment portfolio thoughtfully constructed using our proprietary investment strategies. The asset allocation of the portfolio is actively managed by Matco's Asset Mix Committee to optimize returns while avoiding unnecessary risk. The current investment mix of the balanced fund is 45% Matco's diversified income strategy, 25% in Matco's global equity strategy, 21% in Matco's Canadian equity income strategy, and 9% in Matco's opportunities strategy. Now, on the growth side of the portfolio, Matco's balanced fund benefited from the strong performance of Matco's opportunities fund and from Matco's global equity fund. However, Matco's diversified income fund and Canadian equity income exposures have lagged a little bit so far this year. A few key developments in the third quarter are worth noting. First, yen carry trade volatility. For over a decade, investors have borrowed in Japanese yen at low cost to invest in higher yielding North American assets, including US stocks. The Bank of Japan's rate hike cast doubt on the sustainability of this carry trade. This summer, liquidity and rising Japanese interest rates prompted many to unwind some of their yen carry trade positions. This drove volatility in early August. Now, second, the US Federal Reserve joined the rate cutting party finally. While many developed economies, including Canada, began cutting rates earlier this year, the US Federal Reserve held off for longer. On September 18th, the Fed reduced rates by 50 basis points, again, joining the global easing trend. This larger than normal rate cut signals either the Fed catching up with other central banks or responding to softer economic data. Either way, with more rate cuts on the horizon, the Fed has clearly shifted to its focus from taming inflation to avoiding a US recession. And lastly, broader market participation. In the first half of the year, companies benefiting from artificial intelligence, the Magnificent Seven, dominated the market. However, their high valuations coupled with some of this weaker economic data have allowed investors to shift their focus to the less favored sectors. Global real estate, small caps, emerging markets, and value-driven sectors emerged as top performers in Q3. Now, based on our analysis of the current economic landscape and the risks and opportunities that lie ahead, we do favor prudence over greed. Our allocation of Matco's diversified income strategy is 5% above its long-term average, with a corresponding reduction in equity exposure. Matco's proprietary investment horizon indicator guides our approach, helping us balance this protection and growth. While economic growth may continue, US election risks, geopolitical tensions in the Middle East, and a softening labor market and relatively high stock market valuations do support a somewhat cautious approach. By emphasizing income and protection, we aim to smooth the fund's performance trajectory. Now, looking ahead, as the last quarter of the year unfolds, we will continue to assess economic data and market developments. Given the possibility of multiple scenarios, the fund's diversification and healthy distributions and downside protection position us well to navigate the remainder of 2024 and beyond. Our commitment to managing risk and capitalizing on opportunities remains steadfast, ensuring that Matco's balanced fund continues to deliver strong risk-adjusted returns.